Great. We'll start with the market debrief. First is I know this past week, right, we have a big rally. Okay, actually it's quite volatile. The market went down before coming back up. From here you can see, the market went down, and then past 1 week and post election, and the market start to rally back up. Okay, so this is the S&P 500 index. Okay, and so as I mentioned, for a few weeks now, we have a lot of volatility, a lot of wild swing, to be expected, and this is what happened. No, it just swing down and then swing back up. Okay, so I guess the market is very happy that there is some certainty. Okay, as in who the president will be, although Trump will be contesting, the result. So, and furthermore, adding to this rally, right, is that this news of Pfizer and BioNTech, okay, they announced a vaccine for the COVID-19. Okay, so as of now, we still do not know whether how good is it or not. Uh, from some of my sources or friends, I think Xiang shared that the storage for this is very difficult, so it might not be viable. Okay, but I believe there are a lot of companies coming out with vaccine, like AstraZeneca and such, so you can look at those stocks. Has pushed this market up, to new highs. All right. Now the thing is, looking at the S&P 500, right, the U.S. market, this 2 days, right, the past 2 days have been very volatile. It kept up, went all the way up, and then there's a sell down in the last hour. Okay, if we go on to the hourly chart, can you see now we have a sell down in the last hour. Okay, and then last night wasn't quite strong. Okay, so what we have is that there'll be likely more downside to come. Okay, because there are a lot of trades that are happening right over at this position. So, and we know in the whole global market dynamics, right, the US market has been making all-time high, whereas most of the other stock market has been languishing right at the bottom. Okay, so this there might be possible pullback, until we are very sure, especially the US and China issue. Okay, China doesn't seem to be very welcoming to Biden. Okay, refuse to congratulate them or so. Okay, so we just have to monitor at this moment. Okay, so this is the Dow Jones. All right, Dow Jones seems a little bit stronger compared to the S&P 500, whereas the Nasdaq has performed very poorly against the other three. Okay, we have a very big sell down, and this is mainly by the tech sell off. Your Microsoft, Amazon, all the tech companies. Okay, so as I've shared in the group chat, I've mentioned that because of this shift, right, of new vaccine, new president, um, that companies that has been doing very well during the COVID, your industrial REITs, your logistics trust, your medical sector, your PPE manufacturer, staples, and your so-called like Netflix and tech companies. All these companies that has been doing well, right? We start to see a sell-off in all these companies. With, I will say, the smart money, the funds or institutions are putting money into the laggards, or something which will be more on the recovery of the economy. Okay, so we'll just just briefly take a look at the other global index. This is the DAX. Okay, DAX also had this very strong rally, retesting this resistance over here. Okay, so there's a high chance that it might break out on the upside. As we know now, a lot of European countries are on lockdown. Okay, so this is UK index. Okay, this is a very promising kind of a pattern, whole big base formation, and currently now is doing a turnaround. This is Hang Seng. Okay, past two weeks or 3 weeks videos around here, I've mentioned that this has formed a like inverted cup and handle pattern. Okay, so most likely it's going to break this and and charge for this the at this point I already draw this estimation where this rally will go. So at this moment already retest this resistance, okay, of 26,500 area. Okay, so most likely it might rest. No, it's already started today. There's a rest day. It might rest sideways. Okay, and if it does that, right, very likely it might break off this resistance area, into a new rally. Okay, so you can watch out for Hong Kong, China. Okay, China has been trading sideways. Okay, as mentioned, but I think this one is more of a like a positive sign. So it might retest or charge back to this top of the resistance area. Japan is making a new, I would say, 20 years high. Okay, after all this news has come out, okay, with this rally, so I think Japan is doing quite well. Now with the most of the all this news coming, right, gold had a big sell-off. Okay, now if we look at most of the gold, like gold and so-called the safe haven like bonds are not doing well. Okay, like I've mentioned, those that have been doing well, right, during the COVID times, rallied and stayed there. Okay, so right now it's starting to have a taper off, starting to sell off. This is the 7-year Treasury US Treasury bond ETF. So we are already starting to see some sell off in this. Okay, if we look at Singapore market bonds, right, we start to see SG bond already. There's a sell off past 2 days. Okay, so during the COVID times, a lot of investors has gone into the bond market, but now it already start to sell off. Okay, in favor for more riskier assets. So for like gold, right, I would say there is a higher chance right now that it might break this and retest this area of 18,000. Okay, so this might form a much bigger or longer consolidation, some similar like this. This will take like 6 months. Maybe this one will, because of this huge rally, might take like 1 year, 2 years. Okay, so those who want to go, you just have to be careful of your position. Now with the whole turnaround, right, the crude oil also see a little bit of rally, retesting the resistance here. So we might be seeing a turnaround in the oil prices as the global economy recovers. There will be demand for oil for transportation, shipping, air travel, and such. Okay. So what happened in our Singapore market? As we know that Singapore had already had a huge rally the past few days. Okay, it's like more than a week, 1.5 weeks, okay, of rally, and then now it's pierced this 200-day moving average. So I would say there is a high chance that this might start to turn around. Okay, but of course there will be some pullbacks to come. Okay, so we just watch out for the pullback. We can look into buying into big cap stocks, like banks and such. Okay, the banks, DBS banks is the biggest mover. Okay, I've mentioned in my past video, I think for like more than a month or past month, I've been talking about banks. Banks, buy banks. Banks maybe might start to run. Okay, and I said that DBS it has the strongest relative strength among the 3 banks. Okay, so DBS has moved relatively 20% up. Okay, in this rally from counting from this bottom. So with such a one straight bar up, right, you see like this one straight bar up, high chance that you will start to pull back. Okay. OCBC similarly also has a very strong rally here. This is about 14% up. Okay, and yeah, it closed well today. So we might be seeing it maybe 1 more day or 2 more days, retesting around this region, this price region, about 980. Okay, so we probably around there you can start to look at taking some partial profits or what. Okay, and then we see if we can buy back at a lower price, like probably 940 or 920, as it retests this 200-day moving average, or it's try to turn around this 200-day moving average. UOB, the weakest among the three, I think up about 12.5% or 13% in this rally. Okay, so similarly, it's all showing signs of turnaround. Okay, the other big cap stocks that also contribute to the STI rally, right, are the three Jardines. Okay, so we have this Jardine CNC. Although this is the weakest among the three, Jardine Strategic Holding is much stronger. Okay, with Jardine Matheson as the strongest one. Okay, so these are basically forming a turnaround. You know, is retesting its base. Okay, and then it's trying to break off. So once it break off from this, right, it'll start to rally back up again. So if we look at previous experience, okay, just in the big map picture, this is the '08 crisis. Okay, we have the base formation here. Okay, this whole thing is the base formation. Okay, so after it turns around, right, it has a huge rally. Similarly, as it starts to consolidate back down, this forms a big consolidation pattern right over here. Okay, and once it starts to turn around, a rally tends to happen. So similarly for this, it has formed quite a big base formation pattern over here. Alright, and as I mentioned before, I like it. No, the best is to have like at least 6 months of base formation. So if you have March all the way to November, like 8 months of base formation. Okay, so we might be looking for like probably a cup and a handle pattern to turn it up. This is Jardine Matheson. Jardine Matheson is much stronger. It has already broken out of its consolidation, you know, the past 2 days. Probably because it is the bigger of the mother share among the three. Okay. Some other smaller companies that has a good move, and I think we should expect them to move. Thai Beverage, with the announcement, no, they are reopening KTVs, nightclubs, and discos. I think Thai Bev is bound to benefit from this. Okay, so this is what happened. So likely you'll start to see a turnaround from here. And of course, with our air travel bubble with Hong Kong and possibly China, then we will start to see Genting, you know, having this move. Seems to be a positive one. So with air travel going to happen, a lot of people start to say, hey, how about SIA? You know, is SIA a good thing? Personally, I don't think so. I will try to avoid SIA. Yesterday I met some clients. You know, we had a good chat about SIA. To say about SIA 怕是袂倒. But I want to say, yeah, 怕是袂倒 won't die, but it can also be privatized. You know, like Malaysian Airline has been privatized. You know, what makes us so sure that SIA cannot be privatized? You know, it still can be privatized by Temasek Holding. So personally, I would not recommend SIA, even though travel might start, you know, to happen. Instead, I think going for sets, I think it would be a much wiser option. Okay, it has formed a very nice base, and then no matter which airline, no, full carrier, budget airline or what, they will still use Changi Airport. Okay, and sets will be the one handling all the baggages and the food and stuff. Okay, so I will say as sets will be more directly beneficial, you know, benefits from this economic recovery. Okay, so at this moment, previously sets even at this price over here is like 3 to 5%. You know, so right now it's giving about 1.7%. But if it were to recover, right, most likely earnings comes back, you'll be getting like, you know, 5-6% already at this price point. Okay, previously I've talked about property stocks. Okay, property stock seems to be strong. No, CityDev starts to show signs of rebound. It hit the all-time trend line, and it's going to rebound from there. Okay, so what we see here from city development is that this 620 is where the trend line crosses up. No, it tests there and it had a strong rebound to now 720. Okay, so my guess is it might retest this trend line here, right over here, about 740 or so, 740, 750. Okay, so you have to be wary lah. The next 1-2 days, you can, for those who have bought here, I've seen a lot of trades, people buying over here 620, 640. You should be looking to take profit around here 740 area. But among the property stocks I've mentioned, Hong Kong land seems to be better. Okay, so this is Hong Kong land. Okay, so I think right over here I've mentioned about Hong Kong land seems to be much better compared to CityDev. Okay, so there is a slight drop, and then it thereafter rebound, and the past 2 days has a very big rally. Okay, so I reckon that this might continue on and retest this 440 area. Okay, and if we were to break out, right, then it will be a successful turnaround, big base formation and turnaround. At this moment, Hong Kong land I think is like deeply undervalued. Alright, so I think that's why I mentioned about this Hong Kong land. Similarly, Capital Land also have a strong rebound, but as compared to the like Hong Kong land, I don't think it's as strong. Okay, but there is also news that they are also selling a big chunk of their assets to Capital Retail China, their assets in China. So probably that is what gives it the push also, okay, because they are going to take some profits from their divestment. So as construction is coming up, I think this one I've mentioned during the COVID period. International Cement. Okay, so the past few days has a nice rally, past 1 week, and today there's a big sell-off. Okay, so if you had this, you'll probably have to take profit from here, and then we will look for a new opportunity to enter. Okay, I've mentioned that the air travel bubble that's happening between Singapore and Hong Kong, and possibly extending to Brunei and Australia. So some of the stocks that is likely to benefit, okay, especially from business travel. This is Escort Trust. They deal mostly in service apartment and long-term stay. Alright, so there is a huge rally happening the past few days also. Okay, and the stronger one is of course Far East Hospitality Trust. Okay, Far East, the reason why it's stronger, right, is that it does a lot of SHN, for foreigners, and due to the Chinese and Hong Kong coming back into Singapore, right, they tend to stay in Orchard area, Orchard Sentosa area, and Far East has a lot of service apartments in Orchard and Sentosa. Okay, so that's the reason why this seems to be stronger compared to the others. Whereas CDL Hospitality Trust also benefits, and it starts to gap up and trade above because of all this vaccine news and air travel bubble news. Okay, so it's approaching its next resistance around here. So therefore, because of all this economic recovery, right, a lot of the other REITs will start to benefit. So we check on some of the biggest one. Capital Land, I've mentioned, there are many levels. Okay, it tested this, it break off, and then now retest this $2 area. Okay, so most likely I would say it might retrace back as it meets this 200-day moving average, or it might gap up. Okay, so it's hard to say. So at this moment, I would say it's a positive sign. You can see the volume coming in the buying. So a lot of funds are coming in really, coming back in. Okay, Capital Retail Trust. Just now I've mentioned about the acquisition. So they're actually proposing to acquire 5 business park and balance interest in Rock Square, all from Capital Land and Capital Mall. Capital Mall had a small holdings in some of these properties. Okay, so you should be expecting rights issue. Okay, they're talking about financing methods, preferential offering, private placement. Okay, so preferential offering, in other words, I would say it's rights issue lah. Okay, so expect to have that happening. So if it does, I think it's good to subscribe for it. In terms of long term, in the next 3 to 5 years, I would say China is coming up strong, and they are the one of the first few countries, right, that had COVID under control. Okay. So whereas the rest, right, the move is not that significant compared to this few. Okay, so Maple commercial activities are starting to come back. Okay, so this is a nice rally. From here, it will tend to it's likely to turn back up. Suntec, I would say is quite weak. It's still weak, but overall is trying to turn up. Okay, so as compared to all the others. Okay, Maple Tree North Asia. Okay, this one in the next few days, I think you got to watch out. Okay, it seems likely might burst through. Okay, the reason for that is because of some of the Hong Kong REITs, right, had started to move. Okay, so this is Link REIT. Okay, we can see there's a big move, forming a nice big base pattern. It might start to turn up. This is Fortune Rate. There's a big nice 2 days rally over here, so it has also formed a base, so it's like getting ready to turn up really. Champion Rate, yes, broken off from this long-term downtrend. Okay, it's broken off out on the upside. Okay, so that's the reason why I've mentioned that this Maple Tree, right, though it has not rallied, it seems very likely that it might start to move off in the next few days or probably next week. Okay, so do watch out for this stock. Okay, so mainly these are the stronger ones. Of course, there are some small caps, like Oceanus or all those that they are moving. But as I mentioned uh, in the chat, that all the stocks, most of the stocks that are doing well during the COVID actually turned bad. Okay, so this is Ascendus REIT. Okay, it started to weaken really way before the election. Okay, and then it started to move down. This rally is because of I think possible news coming out, no rights issue and preferential offering. I think it's this one. Yes. Okay, so Ascendus REIT, they are doing some private placement and rights issue, I would say. Okay, so they have already fixed the price. The rights issue coming up is 296. Okay, so do watch out. So that's why this news came out, it gapped down. Okay, to adjust to the new placement issue price. Okay, and there's a lot of volume happening. So I would say this 298, 296 area should be a strong support. This area here should be a strong support. Okay, Maple Tree Industrial, few days sell down, today trust down. Okay, and then there's a lot of buying. happening. I think a lot of people are trying to buy because I mean this type of price they have not seen for like more than a year. Okay, and this is a very fast one, so they miss out. So this sell down, people tend to like start to pick up. So we like to see how this one turns out. Okay, it's, like I said just now, industrial REITs, logistic trust are not faring very well. This is Maple Tree Logistic. Okay, there's a few days of sell down. Okay, breaking support. Similar for this Fraser Logistic Com. Okay, so there's some selling happening already. Okay, with volume. So expect more selling to happen. There's more selling to continue. Capital DC rate. Okay, this forms like a distribution pattern. Okay, so yesterday there's a breakdown, and today there's a further selling. Okay, the end is probably near, so you expect another maybe 1 or 2 more days of selling to happen. This I would say will be the ultimate support. Okay, expect strong buying around this area, 255 to 260 area. Okay. So I believe because there's vaccine coming up, less people are will need um, to visit hospital. Uh, so there's a sell-off, for Parkway Life REIT. Okay, so in such case, right, the demand for PPE everything will also drop. So as I've mentioned, I think last week or even the week before, that the medical stocks, the demand for PPE is waning. So despite good results, right, there is also a sell-off. Okay, this is where they report tremendous 1,000% increase in revenue. Okay, and despite that, there's a sell-off. Okay, so I mean we just have to learn from this. The results is basically reporting what happened before. So this is the reporting for this result. So now this result, we are forecasting, right, the future needs for PPE is going to wane. It's going to go down. So therefore the share price is going down. Okay, so after all the election news, vaccine news, this one kept down. So similarly, Riverstone, after this so-called it moved up because of, I think, bonus issue. Okay, then thereafter because of the news it went down. So it's XB and then sell down. So UG Healthcare similarly, gap down and sell down. Okay, so I would say vaccine news is quite real. Okay, a lot are coming out with it. So therefore, staple companies are also selling down. Okay, this is Sheng Siong. All right, so there's a lot of selling or profit taking distribution. Okay, and then they are reinvesting those money back into companies that is going to benefit from the economic recovery. Okay, so that's all I have for the Singapore market. Hong Kong market, uh, not much. As I mentioned, the banks are running. I've shown you the REITs. The REITs are turning up. Business activity is coming back. But the tech stocks are coming down. Like BYD, I've mentioned over here that this one will start to sell down. Okay, so a few days of selling had happened. Okay, this is Alibaba. Okay, there's more selling happening. Bad IPO and then tech sell off. So this will follow. So if you like this type of big giant tech companies, Alibaba, Microsoft, Apple, you should look at all this selling, right. At the end of the selling, give it like a week, a month, of sell down, and then you can try to pick bottom. Okay, for the long term run. This is JD.com, a lot of selling. If we look in the US, okay, Microsoft tend to be selling down, and I reckon this support, right, there's a high chance that it might break below this, unless Biden came up with some damn good policy to help their own US companies. Okay, so this is Apple, some selling happening. Google had run off. Okay, so this is like Nvidia, sell off. Facebook similarly, some selling happening. Okay, so that's all I have for today.